cluster of changes in the reassessment regime that came into effect from April 1st, but a prominent change in the recent union budget has caught the attention of Abhinav. It has alarmed taxpayers, both corporate and individuals like Abhinav, of reopening notices, as tax consultants and chartered accountants have started receiving a gush of calls from taxpayers on seeking clarity on the new regime. The big change has extended the scope for the Income Tax Department to reopen past assessments. Now, due to this, the tax experts fear that the amendments may lead to the Income Tax Department sending out more notices. If the department finds out that a taxpayer had any big unexplained expenditure, it can send them a notice seeking an explanation and also may reopen the assessed return. In the earlier regime, misreported or underreported income in the form of an asset above Rs 50 lakhs could have triggered a reassessment of the past 10 years. But now the department can go back up to 10 years to scrutinize the finances of a company or an individual if the aggregate income or unexplained expenditure or entries in the book that escaped assessment over multiple years is 50 lakhs rupees or more. If the escaped income or spending is below Rs 50 lakhs, then the limit for reopening of assessment has been halved to 3 years from 6 years. Unexplained expenditure includes money spent on a big event or occasion, expensive assets, and so on. Even if there is any unexplained entry in the books, it could lead to a reassessment of the return. For example, loans that were availed and repaid within a short duration. These new provisions are part of the Finance Bill 2022. So how does it work? The new provisions allows the IT department to rely on multiple sources to reopen cases. Besides the data flagged by the CBDT, risk management and objections flagged by the CAG, earlier the department could reopen cases based on these two sources, but now it can reassess the income expenditure in case of an objection from any audit, information from foreign tax authorities, observations in a tribunal's or a court's order, and so on. IT Department's Insight platform also helps tax sleuths track down potential tax evaders. The Insight portal processes data from various reporting entities. Going by the Income Tax Department's data, India had only about 3 lakh people with income of more than 50 lakh rupees in the assessment year 2018-19. But unlike earlier, the scope has been extended from escape income in the form of an asset to now in the form of expenditure and book entries. These changes may lead to more reopening of matters due to interpretation issues. According to tax expert and chartered accountant Sunil Garg, despite the amendment in the budget this year, the government has mentioned certain safeguards under Section 148A. But keeping in view the past working of Income Tax Department, this may lead to more litigation. While in 2021 budget, Finance Minister had announced that they want to bring down the litigation, but it is a fact that the Income Tax Department has the most litigation in its name. On an estimate, more than 5 lakh cases with tax amounting to approximately 8 lakh crore rupees is in litigation between Income Tax Department and the taxpayers. Money9 suggests taxpayers should always keep relevant documentary evidence related to their large financial transactions to avoid any inconvenience later. They should also maintain consistency in the information submitted to authorities, like reconciliation between GST and IT returns before submission.